Shaun Haney here with RealAgriculture.com, and right now I am joined by the infamous Brennan Turner from Farm Lead. How are you doing today, Brennan?
I'm great. I don't know about infamous, but sure.
Are you enjoying the hockey playoffs?
You know what? It's been a pretty decent run here, and love to see teams on the road winning. That always creates a little bit of excitement. So healthy to say the least.
Yeah, my boys and I watched Florida and the Islander game yesterday. All 5 periods of it. It was exciting. It was Luongo looked a little bit tired. He's getting a little old. He's not as limber as he once did. He sort of is the old timer goalie thing. He goes down and he doesn't get back up.
No, exactly. I think that age starts to creep up on all of us. So I don't, unless he's doing like the Yammer Yager workouts, I don't think he's going to stay in the mix as long as him.
There's not many that do the Yammer Yager workouts. So when
nothing like going to the gym at 2 a.m. in the morning, right?
Yeah, that is a great Instagram feed. That
you could argue it. Maybe some farmer will be going to the gym at 2 a.m. filling some seed carts and stuff, right?
Yeah. Well, the markets. So all this hockey playoffs going on. We've also got this party called the markets, and we were just talking off the air about volatility. And in any sort of market discussion, you can talk about volatility, but in some of these crops, like, it's an extreme. Is this a higher level of volatility than we probably have seen the last 5 years?
I don't know about necessarily the last 5 years, but probably the last two. I mean, basically, you're always going to see a little bit of volatility around the planting cycle in North America. Worries about, are we going to get the crop in? Are we going to crop in? The weather's too crappy, whatever it is, right? I mean, and so simply put, that sort of risk, that weather risk premium from the plant cycle is always going to pipe up. What's kind of helped, we'll say, accelerate some of that volatility is some South American crop concerns. You've got some drought issues in Brazil in terms of the corn crop there, and some rains affecting the pace of the soybean harvest in Argentina. And so everyone's freaking out that this crop is going to be completely decimated, and the fact is it's not. So this is what we've seen in the last basically week or so. It's been some aggressive speculative moves. Case in point, we're talking today here, and we've seen literally a 40-cent move in the July soybeans contract in one day. I mean, that's a pretty significant play. I mean, kind of that volatility of up and down, up and down, up and down. It's got to weigh on the mind of trust me, not only the traders but also the farmer, because when's it going to top out? When's it going to top out? And the underlying fundamentals don't suggest that we should be, seeing this amount of volatility in the market. Probably what you're seeing is a little bit more fund activity in terms of managed money out there, putting money because they think that the market's kind of hit a bottom and it's time to look for places that are going to generate the most possible returns. So commodities seem to be one.
So you said there's no underlying fundamentals. So right away, there's fundamentals and then there's technicals. Is it technical driven? Like, is that what's causing some of the issues?
Yeah, I mean, there was some technical momentum shifts back in November that have kind of pushed soybeans back in the right directions, I would say. But again, keep in mind that our world ending stocks are literally almost 30% higher than where we were 2 years ago. You can take it to the next level. You want to dial it down to the U.S. market, and literally almost double what we were a couple of years ago. So, I mean, at the end of the day, for us to see some of these movements doesn't necessarily justify fundamental component. It's in my opinion, it's purely speculative, and that's why Monday through Thursday last week, sure, you saw a great rally, and then boom, Friday, everything was gone, and then you're starting to see it a little bit again today. There's some weird trading going on, and when push comes to shove, from a farmer's perspective, there's some great opportunities to take advantage of, in my opinion, because there's too much grain still out there that we haven't worked through yet.
Do they publish the numbers in terms of how many people are trading, say on this July soybean contract, how many people are trading on inventory? And how many people are purely just trading?
Yeah, so basically you have basically three kind of divisions of traders. More or less, you have the commercial hedgers, so the grain companies and whatnot. You have the large traders, and then you have small traders, right? And so each contract is worth 5,000 bushels, specifically for soybeans I'm talking about, right? It's different sizes for different markets in terms of the sizes of contracts. But net, when you're trading literally 100% of the U.S. soybean crop in 1 week in Chicago, there suggests, in terms of the volume and stuff, literally twice last week, we saw new record volumes created or made. And so, when you're trading that sort of volume, it's purely kind of like it seems like a day trading scenario, less than, here's what the technicals are and here's what the fundamentals are. And it's just, you're taking advantage of quick spreads and making positions in the market that you think you can earn a quick buck from.
I think it's referred to a lot. I've read articles in the Globe and Mail about the black box, the kind of the computer trade where there's a program in place and there's not even anybody clicking a button. It's basically the computer just trading based on situations as it's programmed to do so. Does that have an effect?
Yeah, algo trading, high frequency traders. I think they've taken over, a lot of the financial market trading that you see today. And there's no reason that, over the last couple of years, the algorithms haven't been built, or have been built, I should say, to get into the commodity market. I mean, the thing about the commodity market is a lot more factors that go into it in terms of just production, supply, and, just some of those different things. I mean, you look at, for example, grain markets. I mean, how do you factor in weather forecasts and the anomalies? We're supposed to get X amount of precipitation, and how is that going to affect crop moisture profiles, i.e. in southern Alberta, where we really need rain? How much will that extra inch and a half or half an inch or whatever comes down these next couple of days, what is that really going to mean? And so for an algo to figure out all those factors is probably a pretty tough job, probably a couple of years away from getting there. But at the same time, there are some positions that they can easily take to see, here's the momentum of the trade, and we're going to keep buying and keep buying, and then boom, we're going to sell, which is kind of actually what you saw in today's trade on Monday. I mean, again, 40-cent move, where on the July contract we moved from, basically a 985, 990 handle all the way up to 1030 a bushel in Chicago, and the market then is climbing closer to that 1005, 1010 level. So. It's at the end of the day, it's outside of my control. It's outside of your control. It's outside of the farmer's control. What we can do is play the game in front of us, and that's what it is.
Well, there's definitely enough liquidity. You can definitely get, if you're looking to trade, you can definitely get a price when you've got that much volume and that much liquidity in the market. Are you kind of a believer in? Sure, there's lots of volatility, but the price is the price, and that's what the market is deciding, or where do you sort of personally fit in this whole discussion?
I mean, more than anything, the markets are always a question mark. There is literally, I mean, it's maybe a tough comparison, but some people may disagree. But who am I? Why do I exist? Right? I mean, we'll never necessarily know some of these answers per se. But the market is the market, and it is its own beast. There's so many different factors that go into the market making prices, and so specifically from a farmer standpoint, where I would say it is in the boat of, I know that I can make this percentage or this ROI or this profit at this price in the market, and so I would like to sell 5% or 10% of whatever what I have in the bins left, or what's my projected output this year. And so, at the end of the day, there's going to be some targets that people put up, and they're, some are realistic, some aren't realistic. But more than anything, it's a matter of this is what the best price is for me, because there's always going to be risk in terms of the price moving one way or the other. I mean, what's to say last week that you didn't price in? Well, here's an opportunity to price in again, because the market moved again this morning, right? And it'll always move. But the question is, how exposed are you to some of those movements? And are you protected on the downside, and are you poised to profit from the upside?
Hey, great discussion here on volatility, and with kind of using the July soybean contract as an example. I just thought as I was listening, we're talking about all these different pieces that make up a contract in the market. I thought of The Big Short. Did you see it?
I have not seen that movie, which is almost embarrassing for a guy with a Yale economics degree and Wall Street experience.
Yeah, it's pretty good.
Tell me and the listeners the premise of the movie.
Well, basically, it's written by Michael Lewis, who wrote Moneyball, and it's all about the mortgage crisis in the U.S., like the Fannie Mae and Freddie Mac, and the role that Wall Street played in basically bringing down, and causing the U.S. mortgage crisis. And there's like 4 independent individuals that sort of pegged it, basically how the movie plays out. It appears that they pegged it at kind of the same time, but sort of independent of each other, and they bet against the market, and the amount of money that they made betting against the U.S. mortgage market is insane. But it's a movie about conspiracy, right? And and the role that Wall Street played in it. It is really interesting. I've heard many people say that this is one of the best movies that I have ever seen.
I think probably they say that because they don't have an understanding of really how those markets work, right? And so, when they see so-called manipulation at hand, gives them a better understanding of really how markets operate, to say the least.
Yeah, well, the interesting part was as these 4 individuals, the one guy, Christian Bale plays him. He's a quirky fund manager.
Batman.
What's
Batman's
that?
A fund manager?
Batman, yeah.
Batman's
a fund manager, and he basically bets his whole fund against the mortgage market, and he starts losing investors because people think he's crazy. Nobody bets against the U.S. mortgage industry. And it is really interesting to watch play out. It is a great movie. I highly recommended it here today as a part of our podcast on volatility and the soybean contract.
There you go. I like that. One thing, I'll just touch on that. I mean, since the mortgage crisis in 2008, one could argue that the amount of financial market support that has been given by central banks around the world, creates an environment where it's going to be tough to see that sort of collapse again. Now, that being said, from a regulation standpoint, I still think that there's a lot of question marks out there. And again, you're going to be algo trading, or high frequency trading, as it's also known, kind of contribute to those question marks and some of the negatives, if you will. And so really when push comes to shove, again, you got to play the game in front of you and take advantage of when you can. Make sales, if you will.
Yeah. Hey, Brennan, thanks a lot for joining us today, and good luck to everybody out there in seeding time. And while you're in the tractor, they should probably be checking out farmlead.com, right?
Check out the app, download the app, post some grain, and best of luck to everyone. Season, stay safe, and let's tear it up out there.